In today's video, I want to touch on Nvidia. I don't even know what the title of this video is going to be, but I just want to maybe have an overview of Nvidia, the stock after another amazing year. Right now, Nvidia trades at $140, $3.43 trillion in market cap, and a forward PE of 35.5 times. Year to date, the stock is up over 183%. Over the last 5 years, Nvidia stock is up 2,258%. Now, of course, with that insane rise, you would have thought that the pricing metrics would have been much, much higher, right? We've seen plenty of stocks this year that are up 100, 200, 300, 500 plus percent, but the forward PE, or it doesn't exist, or it's 200, 300 times. EV to sales sits at 100, 150, 200 times. But with Nvidia, despite the huge rise, even in the last 3 years, it's still, I won't say the cheapest one out there, but the forward PE of 35.6 times is definitely not super, super expensive, all things considered. Especially not if you look at what the growth rates are for a company of this size and the expected growth rates, right? Fiscal 25, sales growth of over 111%, EPS growing over 127%, and that's followed by another 50% top and bottom line in fiscal 26, and then 20%, 21% year-over-year growth in fiscal 2027, and 26% EPS growth in that same fiscal year. Now, my thinking here is that, well, currently the market is expecting fiscal 25 to be the last year where all the hyperscalers, all the big companies are going to increase capex or are going to spend multiple billions of dollars in one fiscal year. I think that is semi-correct. I think we're going to see these hyperscalers continue to spend quite a lot of money on Nvidia products. And then we're not even talking about countries, because I do expect countries to spend billions and billions on their own data center, their own infrastructure, right? We've talked about sovereign AI. Jensen has been talking about sovereign AI as well. There are still multiple parts of the globe that are yet to spend as much money on Nvidia, maybe even AMD products as well. And I think that's what we're going to see maybe towards the end of 25, beginning of 2026. Of course, in 2025, all of those big tech companies are going to give us the capex guidance, are going to talk about what's going to happen in the next 12 months. And then we're also entering the age of inference. We're not only talking or mostly talking about training, right? Training. But what happens next? Well, first of all, you can continue to build out your infrastructure. But what happens next is inference and the monetization part, and everything that comes after that. I don't think we are early days, but I still think that we are early in that huge AI journey. Yes, along the way, some bubbles will pop, for sure. Or maybe I should say some companies will get burned. But along the way, most of those companies will just become more profitable, more innovative, much bigger as well. Who gains from that? Companies like Nvidia, who not only focuses on hardware, but software as well. And that's what I talked about in the AMD video. Nvidia is just so far ahead, not just because of the hardware, but because of CUDA, because of the software. I think 10 years from now, all the robots, autonomous vehicles, and all of that, drones, you name it, Nvidia is going to touch every single industry. So let's discuss all of that in this video a little bit deeper. If you enjoy this type of videos, leave it a thumbs up, subscribe. If not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Currently, the average analyst price target sits 23.23% higher than the price we're at right now at $172.8. If we look at the following pricing metrics, forward PE, EV to EBITDA, price to sales, price to free cash flow, and price earnings to growth, we compare it also to the 5-year mean. It's quite crazy to see that on all of them, other than price to sales, we are under the 5-year mean despite the huge rise in stock price. Actually, if you look at price earnings to growth at 0.93, under 1, I mean, it's still mind-blowing to see. Of course, we shouldn't really be surprised, right? If we look at the huge rise in revenue, but especially free cash flow, I mean, it's just, I do think that this is just a one-of-a-kind type of company. I know many of you will, me maybe as well, going to say, yeah, but Tesla, we could see the same thing with Tesla, with autonomous vehicles, with Optimus, etc., etc. Yeah, maybe we could see that, but until now, I think this is just one of a kind. And look at free cash flow's expected growth rate in fiscal 26 and 27, 45.9% and another 30.5%. The market currently is expecting Nvidia to generate over $122 billion in free cash flow in fiscal 2027, growing 30.5%. This is insane. And a small reminder of what has happened last quarter. A beat across the board, right? For revenue, gross profit, operating income, EPS, free cash flow, beat across the board, huge growth rates year over year. Of course, quarter over quarter, the growth rates are decelerating a little bit. Then for Q4, what did they tell us? Well, it's true that maybe guidance was a beat, but maybe the market was expecting a little bit more than that, even though it's still growing close to 70% year over year. Launch of Blackwell and all of that. Plus, by the way, we're already talking about the Blackwell Ultra GB300, the one that's coming after that. I think, yeah, they are moving extremely quickly, and whoever is trying to keep up with them, well, that's the thing. They will just try and keep up with Nvidia. I do want to go back to 2022 when they presented this. They talk here about the $1 trillion opportunity. How do they come by this $1 trillion opportunity? Well, gaming, $100 billion, chips and systems, $300 billion, automotive, $300 billion. Then you've got a split here of $300 billion between NVIDIA AI Enterprise Software and Omniverse Enterprise Software. And since then, we've seen that slide come back each and every time. This is basically what you get with NVIDIA. You get cloud service providers and consumer internet, that's basically the gaming and the data center systems, that's over $400 billion. Then you've got enterprise. Then you've got autonomous vehicles and robotics, which, to be honest, I think is going to be way more than just 300. I'm saying just $300 billion because we're talking here about markets that are worth way more, which is what they said back in 2022 already, right? NVIDIA's full stack platform serving $100 trillion of industry. And then, of course, this is something that I've talked about at the start when I was still an Nvidia shareholder. Yes, I know, stupid mistake from me. Higher can always go higher, especially if it's a great company. But Omniverse to me was always the most interesting part here. So industrial digitalization, they say here $150 billion. I think it could be worth. And of course, all of them work hand in hand, right? It's not just this. It's this plus this plus this plus that. And this is basically the power of NVIDIA. That's why it's important. Very, very important. If you're serious about software, you should be making your own hardware. We've talked about that when we talked about AMD. And this is basically one of the slides that came up when Steve Jobs presented the iPhone. For those of you that are unfamiliar with all of these things, it's pretty simple because they explain it here on this slide. NVIDIA Omniverse is a software platform for designing, building, and operating 3D and virtual world simulations. It harnesses the power of NVIDIA graphics and AI technologies and runs on NVIDIA-powered data centers and workstations. Basically, if you've seen any videos of a digital twin, it's basically that. NVIDIA Drive is a full-stack platform for autonomous vehicles that includes hardware for in-car compute, such as the Orin system on chip, and the full autonomous vehicle and AI cockpit software stack. Then we've got, of course, a big part here, NVIDIA DGX Cloud. That is the cloud service that allows enterprises immediate access to the infrastructure and software needed to train advanced models for generative AI and other groundbreaking applications. You then got NVIDIA AI Enterprise, that's the operating system of AI with enterprise-grade security, stability, manageability, and support. It is available on all major CSPs and server OEMs and support enterprise deployment of AI in production. And then HGX is the AI supercomputing platform purpose-built for AI. It includes 8 NVIDIA GPUs, that's back when they presented this, as well as interconnect and networking technologies, delivering order of magnitude performance speedups for AI over CPU servers. It is broadly available for all major servers OEM, ODMs. NVIDIA DGX and AI server based on the same architecture along with NVIDIA AI software, and support is also available. And now if we do a quick reverse DCF here, we plug in the free cash flow of the trailing 12 months. We plug in the terminal growth rate, the discount rate. Yes, you can play around with those numbers. Yes, the terminal growth rate here is quite high. Right now, I'm using the risk-free rate. If you disagree, that's fine. You can make your own case. But currently, what does this imply? Well, the implied growth rate to justify today's price is that Nvidia should grow free cash flow for the next 10 years by 17.1% each and every year. We've seen that they are expecting Nvidia, well, the market is expecting Nvidia to already grow much, much quicker in the next 2 fiscal years, right? We've seen that, what was it, fiscal 26 or 27? They're still growing 30% year over year. They're already at $122 billion in free cash flow. So every time I look at Nvidia, every time we look at some valuation metrics, pricing metrics, whatever you want to call it, I am still mind blown at the fact that it still is cheaper than a lot of other companies out there that are barely profitable or are not profitable at all. It's just mind blowing stuff. Now, of course, there might still be some slip ups, right? Blackwell delays, cooling issues, etc., supply chain issues as well, especially with the memory side of things. So we're going to see how all of these things play out. But all in all, if you think that this is the end, the peak, I think you are very, very wrong. Now, right now, if we look at the stock, Nvidia does sit above the 50, above the 20, and definitely above the 200-day moving average. RSI is high, but nowhere near being overbought. So yeah, we are definitely in an okay area right now. Would it be great to see Nvidia back closer to the 200-day moving average? Yeah, definitely. I think the long-term investors would love to get maybe more shares under $120 or so. What do you think? Let me know down in the comment section below. Like, subscribe to all of that, and I see you all in the next one. Bye-bye.